likes. But let's get straight to individual stocks then. This morning, one of the big movers is Zee Entertainment after the TRAI has announced the implementation of the new tariff order 2.0. Vaishta is here to tell us what this means for Zee Entertainment. Vaishta.
Hi Sonia. Well, Trai has made some amendments to the new tariff order 2.0 yesterday, and as per the earlier new tariff order 2.0 version, the pricing on the channels which are forming a part of the bouquet were capped at 12 rupees, which is now being changed to 19 rupees. Also, as per the earlier NTO 2.0 version, there was a capping on the discount of 33% for bouquet prices versus the sum of a la carte. But as per the new tariff order 2.0, which was announced yesterday, the broadcasters are now allowed to offer 45% discount. So there's some positive for the broadcasters. Now we have to wait for the implementation of this new tariff order, which will take place by February 2023, which will be the key. Also, the channel pricing list, which is required to be submitted by 1st of Jan 2023, which is to be watched out for. Nuvama feels that NTO 2.0 implementation is positive for all the broadcasters in the industry, and they expect good recovery in ad revenues for Zee due to the improving gross margins for consumer companies. So net seems positive for the broadcasters, as the subscription revenues now have the potential to improve, especially in a weak, subdued advertising environment. We also recall that Zee's advertising revenues were down 7% in Q2 of FY23, while the subscription revenues were modestly up by about 4% in the same quarter. So all in all, seems a positive for the broadcasters.
Thank you very much, Vahishta, for highlighting that. To discuss all these developments and what they mean for the broadcaster space and Zee Entertainment in particular, we're now joined by Abneesh Roy, the Executive Director of Institutional Equities at Nuvama Wealth Management. Abneesh, thank you very much for joining us and taking the time out. First, your thoughts. What are the big changes according to you and the implications for the industry?
Yeah, thanks. Definitely, this is a positive development for Zee and other broadcasters. So we maintain a buy. So essentially, regulator is giving freedom to the broadcasters to do the package, do the pricing, etc. Last 3 years, if you see the subscription revenues in India for all broadcasters and for Zee in particular has been quite muted. Now what will happen is the litigations will end. So we will see that because of the 45% discount which is allowed in terms of a la carte and package, and of course from 12 to 19 that ceiling is there, we will see more flexibility in terms of pricing. It's good for customer also, definitely. And my sense is, if you look at the subscription revenue for Zee, it's ballpark around 3,000 crore annual run rate. I think this will add around 7 to 8% CAGR every year. Last 3 years, because it was under litigations, it was all on hold. So there was no growth. Whatever growth was coming, that was coming from Z5 and the other music revenues, etc. Now this will become like a 7 to 8% CAGR. So on a 3,000 crore kind of subscription revenue, we expect a acceleration further on that, around 7 to 8%. So this adds a 250 crore kind of a revenue in the first year. My sense is this will not be too much of incremental cost because already teams are in place. So let us assume say 80% of this flows. So we are talking about a 200 crore incremental EBITDA on a 1,400 crore kind of EBITDA, say for this year. That's our expectation. Next year, our current expectation is around 2,000 crore of EBITDA. So there will be upgrade of say 200 crores. The good thing is the regulator is giving 2 months to prepare also. So they are preponed from February end to February, start of February. So that will again give them the time to prepare for this. Plus, advertising revenue will definitely recover in H2 and FY24.
That's what I was coming to, Abneesh, because at a time when the advertising revenues are so weak, right? I mean, just look at the stock. The stock is down about 20% if you look at it in the last couple of months. You think this news is enough for the stock to recover? Because the management as well said that the advertising revenues were not only weak in the quarter gone by, they have no expectations for a major improvement in the second half either. You think this news flow is enough to perk up the stock?
So three things. If you see, Zee is going through a merger process. So what will happen is in Q4, you will see the Zee Sony stock going through the merger process, and the Zee stock will be delisted for around 5 to 6 weeks. So it's a technical reason. Some investors are taking that into account, that why should I take a risk of that 5 to 6 weeks? But post the merger, if you see, it will become almost double in terms of size, revenue, EBITDA, etc., and also much higher liquidity. And merger benefits, if you see 4 to 6% revenue synergy benefit of Z will definitely be there. So I will say that the technical reason could be part of the reason why the stock is not reflecting. Now, on your bit on advertising revenue, if you see, we had this HUL analyst meet also. So clearly, we will see across the board FMCG companies worst is behind in terms of margins and volume growth in the rural. See, rural anyway, now base effect will happen. So even if the structural recovery in rural is still awaited, because winter demand as of now is looking good. So skincare, Chyawanprash, honey, etc., there is a demand pickup also. Plus, palm oil price is now half. So in terms of packaging cost, which is linked to crude oil, again, that is down from the peak. So I will say that, yes, gross margins will expand. FMCG companies will flow back towards advertising. It will happen gradually. Q4 should be a very good quarter for advertising, and FY24 should see a further build up on that. So yes, it's a gradual process. But what we are seeing is gradually everything is coming together in terms of advertising, subscription. Market share has improved 30 bips. And because rural recovery should also start at some juncture, the free dish, which was there as an overhang because customer was taking free dish, I think gradually that should come back in FY24 also.
Abneesh, just getting back to this latest NTO 2.0, the new tariff order, you're saying the new regulations will allow the broadcasters flexibility in their pricing. Can you talk a little bit more about, do you think there is scope for broadcasters to go ahead and hike prices? What does this flexibility really mean for broadcasters at this current juncture?
Right. So one is, of course, because of litigation, everything was on hold.
Correct.
So nothing you could do. Second is 19 rupee pricing is a good pricing. So if let's take example of Z, they have say 70 channels and 19 rupee per channel pricing per customer is there. 19 rupee, there is no problem at all. 12 rupee, there was a genuine problem. That's one bit. Now, second is your predictability and your power to pass on. See, last 3 years, because of litigation, your content cost was going up, but you are not able to pass on to end customer. Now it will become a quasi-consumption kind of a company that you'll be able to pass it on. Pre-NTO issues, etc., if you remember, broadcasters did have a healthy revenue CAGR in subscription. Last 3 years, there is no growth in the subscription. In fact, there's a dip in the TV subscription revenue from the analog TV, etc. The growth was coming from Z5. Now we will see both the growth from Z5 also and from the linear TV also coming back.
So while the ceiling on individual channels has gone up from 12 rupees to 19 rupees, which is a positive, but most subscribers tend to take up a bouquet, right? You always subscribe to a bouquet of channels, and on that, broadcasters can now offer a higher discount of 45% versus an earlier discount of 33%. So net-net, on a blended basis, give and take everything, what is the expectation, on the pricing front?
So, essentially two things here. One is, see, discounting may look optically higher, but issue was because this was on a hold, the 33% was not relevant. So essentially 45% is a good enough discount because you have so many channels where you can cross subsidize weaker channels and get good pricing for the stronger channel. Bouquet makes a lot of sense for the broadcaster and for the subscriber. So I don't think you should be worried on the 45%. The 19 rupee increase, that is the key number. From 12, it has become 19, and then you have huge headroom for the next few years to increase. My sense is this should be, first year, as I said, this could be a 10 to 12% incremental EBITDA coming, because last 3 years, there has been no increase at the customer level. So there is general inflation everywhere. So you can take that higher pricing by 7-8% CAGR. And first year we need to see, because there could be some churn initially. This is happening after 3 years. But good part is 2 months of preparation time is there. So I would say that 19 rupees is the important number. That 45% discount is not really much of a thing, because customer will then go for a bouquet. So you are not able to do much of bouquet because 12 rupee didn't make any sense. Now you are able to offer bouquet at 19 rupee, and customer will also be very happy to take a bouquet rather than a la carte.
Okay, finally then, at this 255 rupees price on Z Entertainment, what kind of upside are you looking at in the next 1 year or so? And would you raise your own earnings estimates based on what you spoke about?
Yes, in terms of earnings, if you see, I discussed the EBITDA number. So there will be an upgrade of, say, 10-12% on the EBITDA on the first year. More importantly, you get a predictability of the earnings from the subscription even after FY24. because of NTO litigations, etc., that was completely on a hold. Second bit is, of course, in the last 2-3 years, we have had one issue or the other: COVID, advertising, subscription, then all this approvals from the NCLT. Those things are absolutely now mostly getting in place. My sense is Q4 we will see most of the approvals happen, and then 5 to 6 weeks of the delisting will happen, and hopefully by March we will see the listed entity. So yes, this stock can definitely see a much higher level. So we do expect that in the next 1 year, 2 year, we will see re-rating because of all this. So 30 to 40% upside definitely is possible.
Abneesh, thank you very much for that. 30 to 40% upside on Z Entertainment over the longer term. Just in the near term, the stock has been an underperformer, perhaps on account of the technical factor, because the stock will get delisted for 5 to 6 weeks before it eventually gets listed as a merged entity with Sony. So that could be perhaps one of the reasons, according to Abneesh, why recently, at least off late in the near term, the stock has been a bit subdued. Get into a break. Up next, we'll discuss what's buzzing in the commodity space. Manisha Gupta joins in next.